Welcome to this video about altcoins and Bitcoin as investments. In this section, we will focus on understanding the difference between altcoins and Bitcoin. Altcoins, or alternative coins, refer to any cryptocurrency other than Bitcoin. They were created as an alternative to Bitcoin with the goal of improving upon its perceived limitations. Bitcoin, on the other hand, is the first and most well-known cryptocurrency. It was created in 2009 by an unknown person or group under the pseudonym Satoshi Nakamoto. The key difference between altcoins and Bitcoin is their underlying technology. While Bitcoin uses a proof-of-work algorithm to verify transactions, many altcoins use different algorithms, such as proof-of-stake or delegated proof-of-stake. It's important to understand the differences between altcoins and Bitcoin before investing, as they have unique characteristics that can affect their performance in the market. Stay tuned for the next section, where we will discuss factors to consider when investing in altcoins and Bitcoin. When considering investing in cryptocurrencies, it's important to understand the key factors to consider when choosing between altcoins and Bitcoin. Market capitalization, liquidity, volatility, development team, and adoption and usage are all important factors to consider. Market capitalization refers to the total value of all the coins in circulation. A higher market capitalization generally indicates a more stable investment. Liquidity is also important because it ensures that you can easily buy and sell your coins without significant price fluctuations. Volatility is a key consideration as cryptocurrencies are known for their price fluctuations, which can result in significant gains or losses. The development team is also a key factor to consider. A strong and experienced team with a track record of successful projects is more likely to deliver on their promises and produce a valuable product. Adoption and usage are also important as cryptocurrencies that are more widely accepted and used have a greater chance of success. When it comes to investing in altcoins, there are pros and cons to consider. Altcoins have a higher potential for growth and provide diversification opportunities. However, there is also a higher risk of fraud and scams, as well as a lack of regulation and oversight. Investing in Bitcoin also has its pros and cons. Bitcoin has strong brand recognition and reputation, as well as a large market capitalization and liquidity. However, the potential for growth is lower and there is still a high level of volatility and price fluctuations. Ultimately, the key to successful investing in cryptocurrencies is to use a combination of strategies such as dollar-cost averaging, research and analysis, and diversification. It's important to have a long-term investment strategy and to manage your risk carefully. In conclusion, understanding the factors to consider when investing in altcoins and Bitcoin is crucial for making informed investment decisions. By carefully evaluating these factors and using a variety of investment strategies, you can increase your chances of success in the volatile world of cryptocurrency investing. Investing in altcoins and Bitcoin has its own set of advantages and disadvantages. Altcoins offer higher potential for growth and diversification opportunities, but they also come with higher risk of fraud and scams, and lack of regulation and oversight. On the other hand, Bitcoin has strong brand recognition and reputation, large market capitalization and liquidity, but it also has lower potential for growth and high volatility and price fluctuations. As an investor, it's important to carefully consider these pros and cons and do your research before making any investment decisions. It's also important to have a well-defined investment strategy and risk management plan in place to minimize potential losses. Some strategies that can be helpful for investing in altcoins and Bitcoin include dollar-cost averaging, which involves investing a fixed amount of money at regular intervals over time, research and analysis, which involves conducting thorough research on the potential investment, and diversification, which involves spreading your investments across multiple cryptocurrencies to minimize risk. In conclusion, investing in altcoins and Bitcoin can be a profitable venture, but it's important to weigh the pros and cons and carefully consider your investment strategy and risk management plan. With the right approach, you can potentially reap the benefits of cryptocurrency investing while minimizing potential losses. Bitcoin is often seen as the most established and stable cryptocurrency, with a strong brand recognition and reputation. It has a large market capitalization and high liquidity, making it easier to buy and sell. However, there are also some potential drawbacks to investing in Bitcoin. On the positive side, Bitcoin has a limited supply, which can help to maintain its value over time. It also has a growing network of merchants and businesses that accept it as payment, which could help to increase its adoption and usage. On the negative side, Bitcoin has a lower potential for growth compared to some altcoins, as its technology is relatively limited compared to some of the newer cryptocurrencies. It is also highly volatile and subject to large price fluctuations, which can make it risky to invest in. Overall, Bitcoin can be a good choice for investors looking for a more stable and established cryptocurrency, but it may not offer the same potential for growth as some of the newer altcoins. As with any investment, it is important to carefully consider the potential risks and rewards before making a decision. When it comes to investing in cryptocurrencies, it's important to have a strategy in place to manage risk and maximize potential gains. Here are 3 strategies to consider. A. Dollar cost averaging. This involves investing a fixed amount of money at regular intervals, regardless of the current price of the cryptocurrency. This can help smooth out price volatility and potentially lead to lower average costs over time. B. Research and analysis. Before investing in any cryptocurrency, it's important to do your due diligence and research the coin's development team, community, adoption rates, and other relevant factors. This can help you make more informed investment decisions. C. Diversification. Just as with any other investment, diversifying your cryptocurrency portfolio can help spread out risk and potentially improve returns. This could involve investing in multiple cryptocurrencies with different use cases and market capitalizations. By combining these strategies and continuously monitoring the market, you can make more informed and potentially profitable investment decisions in both altcoins and Bitcoin. Hello and welcome to this section on fundamental analysis for cryptocurrencies. In this video, we'll discuss the importance of fundamental analysis, key indicators to consider, and how to use this analysis to make informed investment decisions. First, let's talk about why fundamental analysis is important for cryptocurrency investing. While technical analysis focuses on price trends and patterns, fundamental analysis takes a broader view and looks at the underlying factors that drive a cryptocurrency's value. In order to properly assess the potential value of a cryptocurrency, investors need to consider factors such as adoption rates, transaction volume, and development progress. By analyzing these indicators, investors can gain a better understanding of the cryptocurrency's potential for growth and long-term success. One key indicator to consider is adoption rates. This refers to the number of people and businesses that are using the cryptocurrency for transactions. Higher adoption rates can indicate a growing user base and increased demand for the cryptocurrency. Transaction volume is another important indicator to consider. This refers to the amount of the cryptocurrency that is being exchanged on a regular basis. Higher transaction volumes can indicate increased usage and demand, which can lead to higher prices. Finally, development progress is a key indicator of a cryptocurrency's potential for growth and long-term success. This refers to the progress made by the development team in terms of improving the cryptocurrency's functionality, security, and scalability. A strong and active development team can indicate a cryptocurrency with a bright future. So, how can investors use fundamental analysis to make investment decisions in cryptocurrencies? First, it's important to do your research and analyze the key indicators we discussed. Look at the adoption rates, transaction volume, and development progress of the cryptocurrency you are considering. Next, compare these indicators to other cryptocurrencies and to the broader market trends. This will give you a better sense of how the cryptocurrency stacks up against its competitors and whether it has the potential for growth and long-term success. Finally, use this analysis to inform your investment decisions. Consider factors such as risk tolerance, investment goals, and portfolio diversification when making your decision. In conclusion, both altcoins and Bitcoin have their own unique advantages and disadvantages as investments. When considering which one to invest in, it's important to weigh these factors carefully and choose an investment strategy that aligns with your risk tolerance and investment goals. Risk management is also critical in cryptocurrency investing, given the high volatility and potential for fraud and scams. It's important to diversify your portfolio, conduct thorough research and analysis, and consider dollar cost averaging to mitigate risks. As the cryptocurrency market continues to evolve, future developments in technology and regulation may also impact the investment landscape. Keeping up with these developments and adapting your investment strategy accordingly can help ensure long-term success in cryptocurrency investing.